You're looking at the chart, you see all these signals, but it's just not clicking for you. Let's get into it. All right, so here's the thing. These patterns aren't just pretty little shapes. They're like neon signs telling you when the market's ready to change direction. Here's a simple breakdown. When you see double tops, picture the market is moving steadily upward, then all of a sudden the price slams into a ceiling, the resistance. It starts to back off, kind of hesitant, like somebody that doesn't want to ask the same question again. But guess what? On the next try to break through the ceiling, it fails again. So that second rejection, that's your signal. So that market momentum might be slowing up. And so you can prepare for a reversal back downward. Double bottoms are just the opposite of double tops. So instead of climbing up to hit a ceiling, think about the market dropping down and crashing into the floor, support. So it bounces off like it tripped and it's trying to get its balance back. Instead of climbing all the way back to recovery, boom, it trips and falls again. So that second tap on the support, that's the market testing that floor. And if it holds, then it's more likely that we're going to see a bullish reversal, meaning that the price could start moving back up after that second bounce. So double bottoms almost always scream, all right, we hit our rock bottom. Now it's time to rebuild. So triple tops are like double bottoms on steroids. Instead of hitting resistance twice, the market actually has the audacity to reach that resistance 3 times. So you think after that second failure that it would give up, right? But no. So that third rejection, that's that golden signal. And a triple top is one of the strongest reversal patterns that you'll see out there. So if it doesn't break through on the third try, it's almost always guaranteed to start heading lower. All right. And lastly, we have triple bottoms, the triple tops upside down cousin. You see the price crashes down and tests that floor, the support, once, twice, and then a third time. And just like the triple top, that third touch usually solidifies things. That third touch is going to be our confirmation. So if the support holds, then you have a strong bullish signal. So it's like watching somebody trip 3 times before they finally bust their and that strength, you're usually going to see that the price starts to climb from there. A few key tips for seeing these patterns. You want to watch for the patterns near strong support or resistance levels, and that's where they love to show up. Now, you can use these patterns with volume indicators for extra confirmation. So if you see low volume through the first few touches and then an uptick during the potential reversal, then that's going to be a green light. You can also use trend lines to highlight the shapes on your charts, and it makes it so much easier to see them in real time. If it's hard for you to see these tops and bottoms using candlesticks, especially the cluttered ones, just switch to a line chart. Line charts strip away all of the noise and focus purely on the closing prices. And so it's going to make seeing double and triple peaks